Hi, welcome to Accounting 101. Today, we are going to discuss accounting equation. But first, let us define what is an account. So, account is the basic summary device of the accounting. It is also defined as a detailed record of the increases, decreases, and balance of each element that appears in an entity's financial statements. It also includes the assets, liabilities, capital, revenue, and expenses. So the simplest form of the account is known as a T account because of its similarity to the letter T. The account has three parts. First, the account's title. On the left side, it is called debit. Debit comes from the Latin word debitum, which means what will the company receive. On the right side, it is called credit, which comes from the Latin word credere, meaning what will the company have to pay. The basic tool of accounting is the accounting equation. We have here assets is equal to liabilities plus capital. On the left side of the equation, which is the assets, shows how much the business owns. And on the right side of the equation shows how much resources do the outside creditor has and the owner supplied to the business, which is the capital. In all cases, it must be balanced. This should be maintained in every transaction that there is a debit and credit side in the accounting equation. So if there's an asset, it could be there be a liabilities and additional to the capital. As we have the basic accounting equation, the assets is equal to liabilities plus capital. We have the expanded accounting equations. So there are additional accounts on this particular accounting equation. So we have the drawings, so minus drawings, or this is called the withdrawal. So this means that the owner of the business withdraws money to the company for his personal use, plus the revenue or the income minus expense. Same way, with the basic accounting equation, these accounts must be balanced. So accounting is based on a double entry system, which means that the dual effects of a business are recorded. So there must be at least two accounts, the debit and the credit. So we have the features of double entry system. Every transaction is divided into two aspects, debit and credit. One or more account is to be debited and the other account is to be credited. To further understand the accounting equations, we have first to familiarize ourselves with the rules of debit and credit in accounts. So we have here the listed of accounts. First, we have the assets. Its normal balance is debit. If increases, we put it on the debit. If decreases, that would be on the credit side. Next, we have the liabilities. Its normal balance is credit. If decreases, that will be on the debit side. If increases, that will be on the credit side. We have here the capital. Capital, its normal balance would be on credit. If increases, that would be on the credit side. If decreases, it will be on the debit side. Next, we have the income or the revenue. Its normal balance would be on the credit. If decreases, that would be on the debit side. If increases, it will be on the credit side. Next, we have the expense. Its normal balance would be on the debit side. If increases, it will be on the debit side. If decreases, that will be on the credit side. So we have here an example for ARC printing services. So for example number 1, the company purchased supplies on cash. So remember that supplies is an asset. What type of asset? This is a current assets. And we have cash. This is also an asset. Same way, it's a current assets. Okay. So now, it is mentioned that the accounting is using a double entry system. So remember that the debit side is what the company or what the business received. So in this case, that ARC Printing Services purchased supplies on cash. So what did the company receive? That is supplies. So this would be on the debit side. So it increases, that would be on the debit side. Now, the company paid or purchased it on cash. So it means that there's a decrease on the asset. What are we going to do? So that would be on the credit side. So that would be cash. So there is a double entry. So debit supplies and credit cash. Next we have second scenario. The company purchased supplies on credit. Okay. So remember, again, we have to think of what did the company receive. So that is supplies. Supplies is assets. Asset, current asset. Ayan. And credit. So let's see. So we have received supplies, that is debit. Supplies. So again, so let's have it here. Debit, so it increases on debit. Then we have the credit. So it means that the company purchased the supplies but they haven't paid. So that would be a part of liabilities. That would be accounts payable. Accounts payable increases on the credit side.